Welcome back to another video, and today I'm going to be keeping it simple. I'm just going to be giving a portfolio update and review for the month of February 2023. The portfolio currently stands at $18,187, with the majority of the money in the TFSA, $14,587, with $2,000 in the RSP, and that is in USD, and $500 USD in the personal, and $126 in Canadian. So to see this better, I'm going to be using the Dividend Tracker. It is a platform that JJ Buckner created to be able to see your portfolio and see the dividends that you're receiving on a month-to-month basis. If you want to check out the Dividend Tracker, there'll be a link in the description and you can sign up. They do have a free version that you can try out before committing to the premium account. So let's go take a look at the Dividend Tracker. So this is the front page of the Dividend Tracker, and first thing I'm going to do is see the holdings in this portfolio, and I'm going to go one by one just to clarify everything I'm holding, and then I'll go into the sector and industry allocations to take a bigger look at the portfolio. So first company is Algonquin Power. I have 119 shares at a very high price of $18 a share. They are currently traded at just under $10. So this is something I will be considering on buying after the first quarter of 2023 to see how they report. Second holding is Alimentation Couche-Tard, 5 shares. This is one I really want to get into. I've been buying one share a week or so every week, and I want to be increasing this position. It's a very solid dividend growth company with a great balance sheet. So this is something I want to look forward to in the future. Bell Media, 3 shares. This is one I actually am going to be transitioning out of into TELUS, I believe. And by doing this, I want to be concentrating my my telecoms a little bit more. If you want to stay up to date on my trades and my investments, you can take a look at Blossom. It's a new Canadian platform where investors can get together and share their ideas on Canadian companies and American companies at that. And you can take a look at individual trades that everyone does on a daily basis if they wish to share that. So if you want to take a look at my trades, feel free to follow me on there, and you can sign up down below as well. The next company is Bank of Nova Scotia. I have just under 14.5 shares at a cost basis of $80. They're currently traded at $73.50, but they have a pretty high yield of 5.6%. This is a bank that's been lagging some of the other ones, so I did pick up some positions as I think that their gap will close in the near future. I have decided to increase my position in TD Bank. They are one of the best in Canada, and I think that going forward, I want to be exposed to a better bank than Bank of Nova Scotia. Berkshire B is one I hold in my personal account. They don't pay a dividend, and that's why I hold it in a taxable account, so I am not taxed on any dividends in that sense. So I hold 1.4 shares at a cost basis of $379, and this is in Canadian dollars, by the way. They're currently traded at $416. So I have had some gains in this company so far, but I'm not taxed on that until I sell these shares. So that is something to consider when you have investments in a taxable account. I have 1 share of CP Rail, and this is one I'm also getting into slowly. They are rock solid in Canada, and I want to increase this position. They are always trading at a pretty decent premium, so you have to pick and choose when you want to buy them, but you can't wait too long because you want to actually be into the company and get exposed to it as soon as possible. Emera Corp, I have 11 shares of them at $53, so just a slight gain with them. And their neighbor, Enbridge, I have 20 shares. I've held this for many years now, and it's one of my better companies. I've made about $12 or $13 per share on capital gains, and they have a massive dividend yield of 6.5%, so I've made an incredible yield over the past few years with them. Fortis is another big holding. They are very steady and right at the average price I bought them at. They are at 4% yield, so I've actually maybe made 16 or 20% on this company just by holding it over the past few years. goeasy Financial is one that is fairly speculative. They are a subprime loan giver. I bought them on their way up at $147 per share, but they have actually been bouncing around between $110 and maybe $130 per share. They have an increasing dividend, so their dividend is a little bit lower, but you would expect this to increase as they get larger. LQD is my bond ETF. I have 1 share. It is just something to reduce the volatility in my RSP account. So that is just a side note. In the RSP account, I want that volatility to be a slightly lower because I have a longer time horizon, and I don't really, it's more of a backstop for everything else in my life. So Power Corp, I have 31 shares at an average cost of $35 per share, and they're currently trading at 35. They actually recently ran up and are looking pretty solid. They do issue shares, which is a little bit concerning, but they are fairly reasonable at this evaluation here. They have a 5.5% yield, so it's pretty decent if you just hold it and they maintain the share price. Pembina Pipeline, I have 4 shares. They're monthly dividend payer, currently pretty similar to my average price, and again, they have a 5.6% yield. I don't like to be too exposed to this type of energy. I want to be exposed to things like Fortis, where they distribute energy and they have the infrastructure to distribute electricity rather than liquid pipelines. So that's something, and same with Enbridge. They are a midstream pipeliner, but they have exposure to the infrastructure to distribute electricity, and that's something I really want to consider in the next few years and decades, because if fusion ever becomes a thing, I want to be exposed to the distribution of the electricity, not necessarily the hydrocarbon aspect. QQQ is, I have 1 share of it, and this has been very ran up in January. This is a Nasdaq ETF, and there's more speculative companies, so I don't really want to be too exposed to this type of sector, but it is something to consider when you are growing these portfolios. You do want a little bit of mix and dividend growth as well. SCHD, I hold in my RSP account. You don't pay any withholding tax on your US investments in an RSP. So that's why I choose to hold US equities in my RSP. I've bought in at an average price of $111, and they're currently at 103 with a 3.6% yield. So this is their monthly pair. They're very similar to VDY in Canada, but they hold a very large, maybe Dow-centered companies in America. This is something that I'll be buying on a regular basis as well as SCHD. This SPAX is just something to hold in this account for cash purposes. The dividend tracker doesn't allow you to hold cash yet, so the SPAX mutual fund just allows you to express that in that way. TELUS is something I bought 10 shares right after they reported earnings this week at a cost basis of $27. And that's right exactly pretty much where I bought them at, and that's where they're currently traded. So that 5% yield. They do have a higher payout ratio, but they do have exposure to larger industries in Canada. So Bell is exposed to maybe TV and media, where TELUS is exposed to agriculture, and I believe they're going to be doing some more stuff with AI. So that's something to watch with TELUS, as there's not very many players in AI in Canada. TD Bank is one I've been buying more of. I want this to be a core holding in this company, in this portfolio. So it's tough. They're always trading at a pretty high premium, but you can't wait too long. Again, like I said, you have to just dollar cost average in and see where your cost basis lands. As long as you're paying an affordable premium for them, I think it's okay. VDY is the largest position in this portfolio. I have 85 shares at a cost basis of $81, and they're currently trading at $44. And this is that high dividend yield index ETF. They have a 4.3% yield, and they pay monthly. So this is a way that we can compound our dividends on a monthly basis. I buy these on a recurring orders on Wealthsimple on Wednesday and Friday, so I don't have to think about when I'm buying them, and then I'll receive the dividends every month and reinvest them into the portfolio. The last ETF on this list is VOO, and this is just the S&P 500 ETF. I'll be buying this on a regular basis so that I can be exposed to American companies and more growth American companies, in fact. So let's go take a look at the sector and industry allocations just to see how this portfolio is broken down. One of the great things about the dividend tracker is you can see your portfolio and how it's broken down. So the sector diversification shows us 24.2% in financial services. So that's the banks and maybe some lenders. We have 38.7% in, this is the miscellaneous quarter, so ETFs. So it's a little bit tougher to see maybe how those are broken up into. I have $3,500 into utilities. So that would be Fortis and Emera, I believe, 19%. $1,500 in communication services, so that would be Bell and TELUS mostly, I believe. So that's 8.4%. $1,200 in energy, and I believe that would be Enbridge and Pembina Pipeline. That's 7%. $300 or just under 2% in consumer cyclical, and we have $106 in industrials, which is CP Rail. So as an industry breakdown, this is again 38.7% in ETFs. We have 13% in regulated electric. We have 8% in telecoms. We have 8% in banks, 7% in credit services. So this would be goeasy Financial, 7% in oil and gas, Enbridge and Pembina. Then we have 6.5% in utilities, renewable utilities. So that would be Algonquin Power. And that's one of the main holdings that has been on a downturn in the last while. We have 6% in insurance, and that's Power Corporation. $600 or 3% in insurance diversified. And we have just under 2% in specialty retail, and then railroads, of course, with CP Rail. And this is the holding breakdown again. We can see all of our holdings and how, so our largest holding is VDY, second largest is Fortis, then we have TELUS, goeasy, Algonquin, SCHD, Power Corp, right? You can go all the way down the list. So we can see that maybe 1, 2, 3, 4, 5 of our holdings make up about 50% of this portfolio, but we do have to note that the Vanguard High Dividend Yield Index ETF is 20.5% of the portfolio, which is fine because they are diversified in their own way. And one of the things that the dividend tracker does well is it breaks down your income, right? So we get $160 from VDY, $116 from Algonquin Power, $72 from Fortis, and 71 from Enbridge. So it tells you where you're getting your income from your portfolio if some of the stocks are lower yielding or higher yielding in that matter. So because Enbridge is a 6.5% yielder and Alimentation Couche-Tard is a 0.9% yielder, they will, despite the capital principle being maybe similar, the payouts will be different in the end. So this is the one breakdown we can see, and it's exactly the same as what I just went through, but on a bar chart sort of sense. So that is the portfolio as of February 2023. If you want to try out the dividend tracker, there'll be a link below, and check out Blossom too if you want to stay up to date to the daily or weekly trades that I do in my portfolio. So thanks for watching. Stay tuned for more, and like and subscribe if you want to see more of this content.